Now let me start with something simple. Every day we shop on Amazon, stream on Netflix, or read about companies like Tencent, who are shaping the world of technology. But while we are consumers of these businesses sitting right here in India, can we also be investors in them? The answer is yes, and that's exactly what we are going to explore today. Hello everyone, my name is Latish and I help with mutual funds and planning for your retirement and other goals through the investments of mutual funds and small cases. So if you'd like to get help in terms of how overseas mutual funds like these could fit into your financial plan, whether it is retirement or child education, feel free to contact me on the number which you see on the screen. You can also reach out to me directly on WhatsApp, the link for which is there in the description. Today, we are diving into 3 funds that let Indian investors tap into foreign markets. First one is Axis Greater China Equity Fund of Fund, Edelweiss Greater China Equity Offshore Fund, and Invesco Global Consumer Trends Fund of Fund. So this is about asset allocation and diversification, and investing in companies which are outside India can get that for you. Also in terms of diversification, this is very important for you to understand that this doesn't just invest in Nvidia, Microsoft and such big companies, but they go beyond that and also into different countries. So let's understand this further. So many of my investors ask about capturing the growth of China's reopening or the global boom in digital consumer stocks. But all of us are worried about the volatility and market headlines. So in this video, I will break down the facts, compare these funds, key metrics, risks, and also help you decide whether they fit into your long-term plan without giving any buy or sell advice. So before we move into that, let me share something really useful that I personally rely on for these funds. And this is for the fund comparisons. I use MFLab feature, which is available in Rupeezy app. This helps to do a side-by-side analysis. As you can see here, I have done analysis of 2 of these funds. You can compare different funds instantly, check overlap between them, also analyze what kind of sector allocation and asset mix they have, and test how your portfolio would behave before you even invest. Rupeezy is a platform trusted by lakhs of investors for over 20 years. It's 100% AMFI and SEBI compliant, and account opening is absolutely free with 0 AMC charges. So if you want to explore international funds or even gold, silver or equity funds confidently and in one place, I highly recommend you using Rupeezy. The link to open your account is in the description and also you'll find in the pinned comment. Let's get into the comparison. Starting with Axis Greater China Equity Fund of Fund. This is an overseas fund of fund that invests almost entirely in Schroder International Selection Fund. The fund objective is to provide long-term capital appreciation by investing predominantly in Schroder Fund, which invests in equity and equity-related securities of companies from mainland China, Hong Kong and Taiwan. To meet liquidity, up to 5% may be held in debt and liquid schemes as well. The scheme is classified as very high under the SEBI's riskometer. Because it's a feeder fund, its performance is tied closely to the underlying fund, and investors should be comfortable with overseas and also the currency risk. The current fund manager is Mr. Krishna N since March 2024. Let's understand the basics of the second fund, which is Edelweiss Greater China Equity Offshore Fund. This is also a fund of fund which invests in JPMorgan's Greater China Fund. Its objective is also to provide capital appreciation by investing in businesses from Greater China region. This has been in the market since August 2009. The benchmark which is used by this fund is MSCI Golden Dragon Index. Fund managers is Mr. Jayesh Shah since September 2019 and Bharat Lahotia since October 2021. Let's look at the details of the Invesco Global Consumer Trends FoF. This is an overseas fund of fund investing 95.19% of its assets in Invesco Global Consumer Trends Fund. This owns a global portfolio of companies which involves in discretionary consumer goods and services. The scheme aims for a long-term capital appreciation by capturing changing consumer trends. This tracks the MSCI World Consumer Discretionary Index. This also, along with other 2 funds, is labeled as very high in terms of the riskometer. Fund manager is Mr. Sagar Gandhi, who is since March 2025. In terms of the assets mix, as of September 2025, the fund holds 88.7 in equity and 11.3 in debt and cash equivalents. The main holding is in the feeder fund, which is the Schroder ISF Greater China Fund. Sector allocation, technology is 29.5, consumer cyclical is 22.9, consumer services is 14.7, financial services 11.7, healthcare is 6.9, and other sectors are basic materials, industrials, real estate, and as follows. You can see the top holdings of this fund on the screen right now. What you should be aware of is these large tech and internet firms drive performance but also heighten security concentration risk. Now let's look at the Edelweiss fund. The asset size is 2,200 crores with a monthly average of about 2,100 crores. The top holdings of the underlying fund, it has investments in large Chinese and Taiwanese companies like Tencent of 10.02%, the Taiwan Semiconductor Manufacturing 9.9%, Alibaba Group 6.46%, in MI 3.76%, NetEase 2.81% and PDD Holdings 2.66%. These are the largest positions. Other notable names are Meditech, Ping Insurance and Hong Kong exchanges. Diversification. Beyond the top 10 holdings, exposure spreads across more than 30 stocks, though the top 5 account for roughly one-third of assets. Sector exposure skews towards technology and internet platforms, similar to the Axis fund. Now let's look at the Invesco fund. The fund of fund invests 95.19% of its corpus in the underlying Invesco fund and currently holds 4.81% in cash. If you look at the top holdings as of July 2025, the top positions are in Tesla, Amazon, Meta Platforms, Nebus, Nvidia, AppLovin, Booking Holdings, Broadcom and Netflix. These are all well-known digital commerce, entertainment and chip makers. So the portfolio is heavily exposed to US mega caps. The fund seeks to benefit from the structural shift which is happening in the consumer behavior such as commerce, streaming, electric vehicles and AI. This is the reason for the outsized gains which you see because of the technology stocks which have rallied, but they can also result in sharp drawdowns when sentiment turns. You should be aware of these things when you're investing in these overseas funds. Let's look at the fund performance. Here you can see the fund performance of 1 year, 3 year and since inception. Axis has given 31.04 in last 1 year, 16.23 in last 3 years. Returns have been significantly better when you compare it with the Indian market. Let's look at Edelweiss Greater China Equity Fund. The 1 year return is 40.61 and if you look at since inception, it has given 10.23%. The 1 year return benefited from 2024-25 rebound, but long-term performance, if you see, still lags its benchmark and also the Nifty 50 index. Finally, the Invesco Global Consumer Trend Fund. In last 1 year, it has given 55.35%, 21.84% and 3.84% since December 2024. The returns for the benchmark has been 25.81 for 1 year and 18.77 for 3 years. This is primarily thanks to the AI-driven rallies in mega cap consumer tech stocks. SIP and downside analysis. The Axis Fund's 1 year surge stems from the rebound in terms of the overall Chinese equity market after years of underperformance. However, since its launch in Feb 2021, the CAGR has been just 0.64, illustrating how volatile cycles can wipe out gains. When you look at Edelweiss Fund of Fund, rolling returns over long periods are modest. The 5-year CAGR is 1.66 and the 10-year CAGR is 9.94. So SIP investors must be patient and prepared for multi-year drawdowns. Invesco Fund of Fund has delivered stellar short-term returns, but since inception, this also has given CAGR of only 3.86. Showing that periods of rapid gains can be followed by prolonged sideways phases. So a portfolio heavy in discretionary tech stocks can be volatile, which is why it's very important that you have a good mix of asset allocation. Both in Indian stocks, when they are not performing, these mutual funds do perform and have shown good results in the past. And when they stop performing, the Indian mutual funds and stocks will start giving you the returns. So how do we compare them? Axis and Edelweiss are like cousins. Both are essentially China tech plus consumer stories. Edelweiss has more history and bigger AUM, but costs are slightly higher. Axis is smaller, newer, but invest in a similar set of companies. Invesco is a different animal altogether. It's not tied to one region, it's tied to global consumer trends. If you believe in e-commerce, gaming, entertainment and lifestyle megatrends, and if you think that they will keep growing worldwide, then this fund captures that. So the decision isn't about better or worse, it's about which story you want to get exposure to. Let's look at the risk factors. Concentration and regional risk. Axis and Edelweiss both invest primarily in Greater China equities. This makes them vulnerable to geopolitical tensions and any regulatory crackdowns or currency movements which might happen. The underlying portfolios are heavily weighted towards technology and internet firms like Tencent and TSMC. So sector-specific downturns can also have an impact on the portfolio. Currency and geopolitical risk. All three schemes invest overseas, so their NAVs fluctuate with INR exchange rates. Changes in trade policies, sanctions, or political events like we see currently in US or in China can affect the valuations. Invesco's portfolio, for instance, includes US giants like Tesla, Amazon, and Meta. Valuation risk. The Greater China market has experienced sharp swings. While valuations look attractive after 2022-23 correction, they can quickly become overextended. So it is important that you have a balanced approach when you're investing in these mutual funds. Liquidity and regulatory limits. Overseas funds are subject to SEBI imposed limits on foreign assets. When the AMC exhausts its overseas investment limit, it may temporarily raise cash levels or restrict inflows. Investors should always watch for such announcements. Finally, let me stress again on the importance of asset allocation. Rather than chasing recent performance, consider whether exposure to China or global consumer stocks fits your overall financial plan. A diversified portfolio across asset classes and regions can smooth out cycles. Always ensure that you do consult your financial advisor if you do not have one before investing in any of these funds. If you would like to get help in terms of understanding these overseas funds better or prepare a financial plan and invest through me as a mutual fund distributor, you can always reach out to me at the number which you see on the screen. Also in the description, you will find the WhatsApp link to contact me on WhatsApp. And if you did like this video, please don't forget to subscribe and like the video. I'll keep bringing you fund breakdowns in clear, simple language. This is Latish signing off. Invest wisely and always with clarity. Have a good day.